Gang, today we have a big announcement. Staying true to our proven framework, buy right, manage right, and finance right, we now have a finance right solution available for you. This past Monday, we launched Rand Capital, your one-stop shop for all your multifamily financing needs. Gino, tell the listeners about Rand Capital.
The last 5 years have been quite a ride. From 25 units to over 1,200, we've learned how important it is to get your financing right. Along the way, we've unlocked some creative sources of capital to mitigate the risk on our deals while creating even stronger returns. Jake and I got to thinking, how can we help other investors get the same terms that we've been able to negotiate over the years? This is why we wrote the book. This is why we have the podcast. It's been our mission to help investors do more deals, do better deals, and ultimately become financially free. Rand Capital is the financing solution to help you secure the best debt for each deal that you do. Whether you're brand new or have been in the business for a long time, we're here to help.
So go to our website, randcapllc.com, to start the conversation today. Even if you don't have a deal on the line, let's jump on a call. Again, that's randcapllc.com. We look forward to crossing the finish line with you on your next deal. Hello, everybody. This is Jake Stenziano, host of Wheelbarrow Props Podcast, here with my co-host, the multifamily mentor, the coach, chef, the father, six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, how we doing, bro?
Good, man. You got some books coming out this year. You got an event coming. You got a couple of businesses on the way. What's going on with you, man?
Well, the number one thing for 2019 I want everybody to focus on is clarity. Everyone, when you end the podcast, the question you need to ask yourself is what's important to you? That's how you're going to start setting your goals, getting the clarity. And number two, taking responsibility. Whatever happens to you, don't blame Jake. It's all Gino's fault. Number three, focus on the solution, not the problem, right? Those 3 steps alone are going to help you solve and actually help you form your goals and actually help you go towards your goals. That's how I want to start this podcast. Think about the beginning of 2019. I just also want to thank everybody listening to us. Give a big shout out to everyone listening to Jake and I every week. We take a lot of pride in that. We want to offer as much actual content as possible. We love you guys. So if you guys want to leave us a review on our podcast, please do so. I want to send out a free PDF copy of our book. Jake is always telling me I love to give away the farm, but if you're going to start multifamily in 2019, you need to read our book, Buy Right, Manage Right, and Finance Right. It's a 3-legged framework. It's our framework on the 3 things you need to do in multifamily. So it's a great way to start. So let's start off with 2019. Great. What say you, Mr. Stenziano?
Hey, let's do it, man. We're just doing it. We're doing it this year. Appreciate everybody. Love the reviews. Love the book. Let's get into it. Guys, today's guest is Tamar. Tamar has done a little bit of everything from purchasing homes, sight unseen, on auction, to fix and flips, to large-scale renovation projects. She has a keen eye for evaluating deals for maximum returns. More recently with her company, the Marotta Group, her work is focused on the acquisition of underperforming multifamily assets and commercial properties, where she can work with her team to stabilize these assets and accelerate returns for her investors. We might need to hire her, Gina. We got some of these stabilized here. So without further ado, Tamar, welcome to the show.
Thanks, you guys. I'm so happy to be here.
Happy to have you.
Yeah, happy to have you. Why don't you sounds like you've done a little bit of everything. You want to just give us a little background on how you got started and then how you got to where you are today?
Yeah, absolutely. I guess from a professional sense, I go back in small business and startups for about 20 years. And I love small business and startups. And I got an itch about 5 years ago to start my own gig. And it took a while to figure out what it was going to be. But ultimately, I landed on the fact that I really wanted to build an empire of real estate for us to live off of. And my husband and I were both working full time at that time. And I was in the executive suite of a couple of different companies for those 5 years while we were getting started, really investing in real estate. Even though I bought my first home when I was 19 and we had always had a couple of rentals, we just decided to step up the game. And so it took about 4 years for us to, get into the ramp up the game where we were buying houses sight unseen on auctions. And after a while, we just really realized that we weren't going to reach our goals fast enough. And that's when I decided to leave the corporate world and focus on multifamily investing and starting essentially a syndication business. I knew that for the next 3 to 5 years, I was going to be working as hard as possible to syndicate a number of deals to set us up for financial freedom. And right now, we're looking to retire my husband in about 18 months. I've been in this game multifamily for about 2 years now. So yeah, it's been a blast. And I started my multifamily syndication business, almost 2 years. And I have to tell you that one of the things I did at the very beginning was go onto your website and get some ideas of what I should be doing so I could transition from single family to multifamily. And that whole buy right, finance right, and what is the third one? Sorry, I'm forgetting right now.
Manage right.
Manage right.
Three-legged stool. It really is, though.
Three-legged stool. And the other thing what you guys really focused on was the credibility kit. And so when I was moving into multifamily, I thought, well, how can I transition from single family to multifamily and from the corporate world into multifamily investing? And I took that model of putting together a credibility kit and put together a massive business plan with all these marketing tools that I could do. And over the last 1.5 years, 2 years, as I've really worked on that, I'm now seeing the fruits of my labor pay off, and that people do see me as a credible source and, a thought leader in the space. And also that helps with working with the lenders and the brokers and the property managers and all that kind of stuff. So I just want to applaud you guys for the material that you put out, because it was really helpful for me in starting my multifamily investing game.
Thank you. What I want to know is, how did it feel like when you left your job? What was that feeling, and how did you transition into, the multifamily from corporate?
Yeah. So I had decided to leave my job, and it's a story I've told a number of times, but I just reached a point where I thought I'm done being the CEO of somebody else's dreams, and I don't want to ever do that. I want to be the CEO of my dreams. So it wasn't a place where we had reached enough passive income for me to quit my job. In fact, going back for years and years and years, probably 15 years, my husband and I have always disciplined ourselves to live very frugally just on his salary. And so we would use my income for investments and for travel and for kids' activities and such like that. And so since we were so disciplined, I was able to quit my job and take that risk and move into something that I knew would be more fruitful for us in the future. And so I will say it was a little bit scary. It was, because when you're going off and being an entrepreneur, when you've always been an employee, there's a lot of unknowns. So you need to make sure that you have assessed what your financial risks are, and that you have the wherewithal to go through with what you say you're going to do. So I took probably about 2 to 3 months of just really exploring a ton of ideas. I went to a Tony Robbins conference. I did a lot of reflection, and then I just started researching like crazy. I knew that I wanted to move into multifamily, but I had to get my bearings straight, so to speak. So it took me at that time probably about 2 to 3 months before I was really ready to start ramping things up. And then I had set a goal for 6 months down the road to have my first acquisition in place, and I actually had my first one within 2 months. So I don't know. It was, I think the scariest part of all of that was making this decision to leave. And then once I left, I was like, okay, I got this,
Mm-hmm. So what other recommendations would you give people? Because when somebody asks me, they're like, well, what number? And I say, if you have a financial freedom number, if you can make 80% of that, you should just leave, because you'll figure out the other 20%, you'll scrimp and you'll save. But what other recommendations do you have for people wanting to leave their job, going to this full time?
Gosh, before they leave their job, I would say number one is putting together a very detailed budget and financial analysis of where you're at. You also need to know that if you quit your job, do you have somebody else in your household that's going to be able to show their history of income? So for instance, since I was self-employed, that income doesn't count on your tax returns for 2 years for some of these loans, especially if you're doing smaller multifamily properties. My first 2 properties were under $1 million. They were like 800, 900,000. And so they were full recourse loans. And so the banks are going to look at your tax returns with more scrutiny than if you go after it with agency debt. And so I needed to have my husband's income, and that those, they want to see your pay stubs and things like that. So you do need to take that into consideration if there's somebody else in your house that does have stable income. Unless you're going after bigger properties and you're partnering with somebody else that has that taken care of. So that's another conversation. If you have either somebody in your house or somebody that you can partner with. So yeah, a budget really helps. And I think you need to really ask yourself too, if you're the type of person that's disciplined enough to go after entrepreneurship, because it does take a lot of discipline every single day. And it takes planning and goal setting and such. And so I'd start working on some of those things ahead of time, of at least setting some goals and seeing yourself follow through with those. I don't know. For me, it was just a little bit of a no-brainer because it's my personality to be a bulldog and go after whatever I want to go after.
So how are you going to do with your husband? Is he on board, ready to leave 18 months? Is that what his ultimate goal is? And how do you think he's going to feel? Because he's been in the corporate world for a long time. And those paychecks every 2 weeks are great, especially during the holidays. I mean, Jake and I work harder on during the holidays than we do regular because no one's working.
Nobody else
except
is
for
working.
us. And we closed 140 units last Friday between New Year's and Christmas. Every year we do a deal during this time. And every year during this time, everyone else is not working. So there's a mind shift going on. So you preparing?
I got caught up on more stuff in the last 2 weeks than I was saying Tamar before the show than I have in a long time. It's been great.
Yeah.
So.
That's right. I know. I was just talking to Jake about that. And I said I was frustrated during the week of Christmas to New Year because I was wanting to hustle and nobody else was in the office and I wasn't getting the answers that I wanted to get taken care of. Although I did have a major life-changing conversation with some business partners. So it was amazing. But how would my husband feel? So, he is, I've known him for 25 years almost. We've been married for almost 18 years. He's always been the biggest cheerleader in my life. And he's always like, okay, wife, do whatever you want. Just let me know when I can retire. That's kind of his attitude because he knows whatever I say I'm going to do, I'm going to do. And so the reason why we came up with 18 months from now is it's 3 weeks before his 50th birthday. And I want to give him the gift of retirement. And it's not something that I was like, I want to give you the ability to retire. It doesn't mean that you have to. But as we've been talking a little bit more about it, I think he's been coming to that place where he's like, well, what can I do with my time if I'm not working? And so we just got him signed up for pilot's lessons. So he's going to become a private pilot and probably spend a lot more time with, the Boys and Girls Club and all the sports that our kids are in. And he's so great in giving back to the community. And that's what I really believe is, and I've heard so many people say that when you do become financially free, it frees up your time to do more good in the world, and then your brain, it's like when I left my corporate job and I gave myself those couple of months to just think and be with myself and be creative. Is that creative space that you don't get to have when you're doing the 9 to 5. So since he's had a little bit more time to think about that, he's like, wow, what would I do with my time? So like I said, it's not something that he'll necessarily do, but we are moving and building our dream house about an hour south of Seattle here. So I'm sure there'll be plenty of fun stuff to do down there.
That's great. See, retirement on this show to me, is totally different than what everyone else thinks. Retirement on this show means finally getting to do what you want to do. And that's creating Jake and Gino. And I was in an Allstate office 2 weeks ago getting a policy for my golf cart. Street legal, so expensive, right? I'm sitting there talking to the Allstate guy. So he goes, you look like you're really financially intelligent and all that. He goes, have you started planning for retirement? And I said, dude, I'm retired right now. I said, there is no retirement. The retirement plan is the 1,000 units. So, and he looked at me and it's such a disconnect because I'm assuming that everyone's got a financial planner and they're all planning for saving for retirement and saving for kids' college. And it's just, that's not the way to do it unless you want to stay middle class. So I was a shock to him. So I always like to ask that retirement question because it's not, once you retire from whatever you're doing, you're always on to other things. And retirement 30 years ago was like, okay, I'm 58 years old. I can retire. I can go enjoy my life. Let's enjoy our lives while we're living. So that's a big mind shift for a lot of people. That's why I asked the question.
Yeah, for us, we look at it from a lifestyle point of view, and I love being an advocate of intentional lifestyle design. And, our dream at our 10th anniversary was to have at our 20th anniversary, a piece of land in Hawaii. So we could go build in our favorite place. And we did that. We bought a piece of land like 6 years ago. And so now we're looking at building a place over there so we can have a mobile lifestyle. We can travel whenever we want to. But for me, I think, I'm never going to retire, quote unquote. I have too busy of a brain myself. I will always be doing something just larger than life. And so, I'm looking at things like starting a fund and just really ramping up my game. I've said that word like 4 times. What is my problem during this interview? When you do that every once in a while, listen to yourself. So for me, retirement is not sitting around. I'm always going to be working on something or another.
That's a cursing and a blessing at the same time when your mind is working all the time because you can't shut it off and it's hard. Can't. And Mr. Stenziano will talk to you about meditating and all that. He says it's the best thing in the world. It's changed his life over the last year. And Got to get
I
into
haven't even got onto the TM yet. I'm only in the mindfulness. I got an evolution coming. So you don't even know level 2, bro.
You're still a white belt, dude?
I did. Wait to the black belt, man. I'm gonna start floating, man. Once my chi gets cranked up, you don't even know what's about to come, right? You want 2 books this year, be 5 next year, right?
Oh my gosh. Do you have a hard time with meditating?
I do.
Yeah.
I mean, I pray, so I sit there, but I mean, it's just
Yeah.
like, wow, my mind just doesn't want to shut off. And then I get these ideas. So
I got to bring him into the trust tree. Come into the safety net. We'll get you. Come stay with me for a week. We'll get you there.
Well, let's start meditating and talking about your first deal tomorrow. Cause it was, the first one's always the most important. I mean, talk a little bit about the specifics, how you found it, where it was, the numbers, did you partner? Let's discuss that first deal.
Yeah, for sure. So the way that I found it was on LoopNet, and it just happened to be that I was practicing on underwriting a ton of deals as I was doing all of my research, and I came across this one deal and I realized, oh man, this seems too good to be true. So I reached out to one of my broker friends who I had recently met, ran it by him, and he says, oh my gosh, this is almost too good to be true. Like, I would buy this one. So it was kind of a funny story because I had not yet talked to anybody about raising capital because I was still in the mindset of we're 4 months down the road before I'm going to start working on this, because we were in the process of we had just bought a single family house, so we wanted to wait till it was refied so we could use some of the capital for the deal. And so he asked us if I wanted to put in an offer, and I said no, because I haven't started raising capital yet. I don't know. And then I stopped myself in the middle of that sentence. I said, no, let's put in an offer. Let's do it. Because I love forcing myself to take action when I don't know what the answers are, because I think that things happen so much faster that way. So that one was a 15 unit. It was in Eastern Washington. It was about 4 hours away from me by car.
Mm-hmm.
And the purchase price was $825,000. And I think we went in $25K over asking and no financing contingency. And I was so prized because it was the very first multifamily that I ever put in an offer on, and I won the bid. And there was lots of hooting and hollering after that. So it was a pretty close, like easy transaction. And we ended up thinking that we were going to rehab the units, maybe about 5 of them at first, because we thought, well, we'll raise the rents. They were about $300 per door under market. So we raised the rents across the board, and instead of 5 people moving out, we had 5 people move out the first month, 2 the next month, and 3 the following month. But we just decided to go ahead and renovate all 10 of those units. And now we're getting ready at this point to refinance. We should have the refinance done at just any time now, about 18 months later, and return about 70% of member capital at that time.
Wow, that's awesome. That is great. So how did you found it on LoopNet? So everyone, I always like to do a recap, but this is really important to actually say it right now. When a deal is too good to be true, if you're a half full person, that deal is not too good to be true. Usually there's some value to it, because a lot of us get scared off and go, well, it doesn't work. It looks too good to be true. Take the steps and go take a look at it and dive deeper into it, because it's not always the case.
Do the work.
Yeah, because we've had a lot of students go, that just looks too good. And in this market, you can get scared off by saying you can't find anything. So the other question is LoopNet. LoopNet works. I mean, there are deals out there that are sitting out there floundering. What you need on LoopNet are motivated sellers, or you need mom and pops who just don't know how to list these properties. When you go in there, some of these sellers sometimes takes forever to get you information back. So it's hard to work with them. So that's why they're sitting out there and they take forever to sell. So don't discount looking at stuff on LoopNet. You're not going to find a deal all the time, but be on there. You're going to be finding brokers. So that's really important. How long between your first and second deal?
4 months. But from the time I closed until the time I closed on my next one was 4 months.
And where was the second one located?
About 15 minutes away from the first one that I bought. And so I had gained some credibility with a few of the brokers in that city, and they brought me an off-market deal. That one was about the same size. It was 16 units. It was about the same price, but it was in much worse condition. It was a huge rehab project. It was an old military barracks from the 40s originally that was turned into apartment complex. And one of the buildings had burned down about 1.5 years prior. And I think that the sellers took the insurance money and just decided not to do anything with it, because they probably owned it free and clear. I'm pretty sure they did own it free and clear. So they didn't want to put a lot of work into the property. And so I looked at it, and because we had done so many rehabs on single family houses on auction, that we had just seen bad stuff, I was not scared of the project itself. So we went in, we got a pretty good credit from the seller because of the condition that was in, and we were able to obtain seller financing on that one as well for a full 18 months. And so over the course of the last year, we've owned that one for about 13 months now, almost 13 months. We've rehabbed 10 of those units, and I'm actually getting ready to list that any day, probably in the next month, and just turn that one around. And the reason why I decided to do that instead of hold it long-term is I was looking at if I held it for 10 years long-term, because that's what I always plan on, is I plan on holding them long-term, but then I always look at the opportunity as they come and some of the other decisions that are, the factors that are happening. So if I held it for a good 10 years, I would have to replace all the windows. I'd probably have to replace the roof again, and some other things as well in that property. And so by selling it now, I'm able to make considerable upside and have probably double all of our money within about 16 months, which is pretty darn good. So I'm doing that and then rolling it into a property that's in better condition.
What is your buying criteria? What are you looking for in these multifamily assets when you're looking and underwriting a deal?
What was the first part of the question again?
Oh, buying criteria. Like, you're looking for certain cap rates, cash on cash returns, value adds. I can raise rents $300. What is this? What are you looking for?
I have a number of things that I look for. So I don't mind to have a cosmetic rehab type project and value add by raising rents. I like a combination of those two things. I'm willing to go after some projects that other investors might not be willing to go after in a rehab sense, just because I have familiarity with those types of projects. Returns, it's changed since I started underwriting almost 2 years ago, because before I was looking for 15 to 17% IRR. Now I'm looking for 13 to 15% IRR. And I also want to make sure I have a couple of different scenarios played out. So before, that might include a refinance in year 2 or 3, where now I'll have a scenario where I can do a refinance, but then what does it look like if I hold it long-term without a refinance, because of where we're at in the economic cycle here. So those are the biggest things. And I always tell my investors that because of the types of projects that we're doing the first year, it's very unlikely that we're going to have any sort of substantial returns, because we're going to be putting all the money that we have back into the property. And so by year 2 or so, 2, 3, 8, about 8% cash on cash return is what I'd like to see.
Do you get pushback from investors when you tell them, hey, listen, I'm not giving you any money year 1, but year 2 or year 3, you're going to be getting a lot of your money back?
No, because I tell all of that up front. So I set very clear expectations, and I also have it written into my operating agreements where there will be no partner distributions for at least 6 months. And that's just I let them know that, number one, it's my fiduciary responsibility to take care of their money and the asset. And so I would rather have extra money sitting in the bank account in case something goes south than send out all my money to investors just to make them happy. I also would much rather reinvest in the property if we're planning on holding it for a long term, to make sure that something we don't have deferred maintenance that's going to come up later and get worse and be more expensive in the long term. So the way that I look at it is I want to provide the best housing that I can possible for that class of tenants. And I'm not going to be a slumlord. So I want to make sure that the properties are clean, they're safe, they're comfortable for our tenants. And as a result of that, we're going to get better tenants in there. We're going to have longer term tenants, and then we'll have higher returns in the future. So as long as we set those expectations up front, I haven't had any pushback on that at all.
That's a great tip for raising capital. What are the tips do you have for listeners on raising capital?
Oh man, I suppose I have quite a few of them, but talk to everybody. Talk to everybody you know about what you do. And, I tend to be a person that is excited about everything in life. And I love whatever I'm working on. And if I don't love it, I probably won't be working on it. And so sometimes when you have a higher level of enthusiasm in life, people are more willing to talk to you about what you want to talk about. I will say, though, that I have never directly asked somebody for capital. So mostly it comes from all the networking events that I'm doing. I've done some speaking engagements in our local market here. I have a podcast. blogs, LinkedIn posts, that sort of thing. So I get now people reaching out to me because they see the platform that I've built, and it goes back to the credibility kit. And now people are coming to me actively. I haven't had to search for investors since my very first deal.
Wow, that's great.
Yeah. And it's actually quite astounding to think about it, because it really has only been a little over a year and a half since I raised that capital for my first deal. And I've done I did 4 in 14 months, 4 syndications. And so, yeah, enthusiasm helps, telling a great story, and just talking to everybody.
So there's a recurring theme, Jake, with a lot of successful people. They give to get. And Tamar's talking about giving a lot of free information, giving a lot of advice, working on social media, and she's out there, and it's inbound marketing. So basically she's putting everything out, and the marketing is all coming inbound. So that's an excellent point. And a lot of successful people do that. And the other thing is how you show up in life. That's important. Yeah. Like Eric Gunderson says, if you show up with a high level of energy, people are going to be more attracted to you. As Jake likes to know, the reticulator activating part of your brain. Remember that? Remember that, Mr. Stenziano? I mean, that's what Tamar's talking about. You show up, you're going to see the opportunities around you, and you're going to be more prone to attracting people, right? Man attracts not what he wants, but what he is. So if you're a high level person, you're going to attract a lot of high level people and a lot of high level money, right? The person who has low level of energy is going to attract a low level of money. Money's only energy, so you're not going to attract any. So you better get your game on, right?
It's so true. That actually just gave me chills when you were saying that, because I love saying yes to conversations that make me feel really like out of my comfort zone. And I've done that a couple of times recently to be at tables that have really elevated the conversation, where, we're all sitting around the table and somebody brings up, oh, that was like, we lost $1 million or something about $1 million. And one of the people were like, well, it's really not that much money. And I think I said that out loud too. And then I was like, did I just say that? Like, because if you're thinking bigger things are going to happen, But going back to what you said too about the raising capital, I think, you can't treat this as a hobby. If you're going to do this to create financial freedom for yourself, and I approached it that way from the very beginning, was I wasn't going to treat this as a hobby. This was going to be a business. And because of such, I laid out very strategic plans of how I was going to reach my audience. And so I have in one of my notebooks, my marketing plan for last year, the tail end of last year. And I have probably 10 or 12 different types of touch points that I reach out to people. And it doesn't have to be just your investor base, I guess, so to speak. It's also reaching out to all your vendors and, your brokers and people that are just in the community that you've never talked to before. And so if you have different ways of touching them, with that, some are tangible and some are not. Maybe you send them gifts in the mail. Maybe you receive email. Then you have some audio stuff. Maybe you see videos. So you can reach people in different kinesthetic ways. Then you can speak to them in the way they like to be spoken to. And it just is different when you receive something in the mail. Like I invest with Joe Fairless and passively on some deals there. And I get in the mail every month, I think, one of his newsletters that's in paper. And he talks about that. Like it's different when you receive something in person, in the mail, something that's positive and it's not a bill. And then that makes you think of them when you weren't expecting to think of them. You know?
I agree.
Yeah.
I want to share a story, Jake, with one of the students Tamar said about mindset. I want to give a shout out to Kyle M. Really, really awesome dude, right? Young kid, 21 years old. And basically what he said was, I said, you're going to college. He goes, I don't want to go to college. The only reason why I'm going is to satisfy my parents. I promised them. And he's going to have a couple $100,000 in student debt. I'm like, he's like, don't worry about it. He says, I'm going to make so much effing money. It doesn't matter. I'm going to blow. And I'm like, dude, I'm talking to the right kid. And the funny thing was, I wouldn't have been talking to someone like that 5 years ago because I wasn't at that level. Now we're attracting those kinds of people that $200,000 in student debt for a 21-year-old kid. I mean, Kyle is going to kick ass. There are a lot, dude. I'm telling you, I felt sad for, but he didn't weigh him down. And most people will be like, I've got so much student debt. Where am I going to start? He's already got his real estate license. He's ready to go. I mean, unbelievable, Jake. So it is all about mindset.
I saw some crap online yesterday. It was like why the millennials are not going to have the wealth of their parents and why they're weighed down by this, that, and the other thing. I'm not trying to sound braggadocious, but I'm so much better off than my parents are right now in my life, and I've created so much wealth, through real estate, that I just was like, like to put that out like a cigarette butt, it just pissed me off, man. It's just like the woe is me bullshit. I just can't stand it.
No, I agree. No, I just wanted to mention that.
That just really pissed me off, man. I just was like, oh, this stupid.
It's the mindset.
Because then they're like, oh, you're not going to be able to do it. Your parents, you're going to have so much better life, and you just give up. It's not even worth it. Just, it's like, put a gun in your mouth and shoot yourself. Then it's pathetic.
I agree with that. So, Tamar, before we go into the short answer,
I'm not advocating suicide. I didn't mean it like that. It was just like people say too hard and they shouldn't try. It was so frustrating. Like, don't even try because it's not even worth it. The cards are stacked against you. Your life is going to be tough. And I was just like, this is the most pathetic crap and like the drivel that they put out there sometimes. But sorry,
have you been reading Atlas Shrugged?
No, I need to. That's I need to read it some more, man. It's been I got to switch discs. I get my little thing. So I got a disc guy, and I listen to it in the car, and my thing only holds 10, and then I got to go restock at the well. So I haven't restocked yet. So I got to restock for you today.
You're a disc guy. Tamar, what is before we get to the short answers, what is your best real estate advice or tip for the listeners?
Oh, my best real estate advice.
For a tip.
I think that if you can talk to as many brokers as possible and outsource the things that you are not an expert at. So one of the ways I've been able to grow my business without having any employees is that I outsource everything that I'm not an expert at. So my PR, all of my finances, my taxes, my bookkeeping, and those sort of things. And even when I'm getting a loan, so I use a mortgage broker exclusively that, I don't have time to be reaching out to 80 different mortgage brokers, but my mortgage broker, that's what he does for a living. So I'd much rather engage with a couple of those guys who save me a lot of time. Because listen, I'm a busy mom with 3 kids that are ages 10 and 10 and 12, and I homeschool 2 out of 3 of them, and I have a full-time business and a podcast, and I just sold another business. And so if you want to make the most out of your time, make sure that you are using other experts and utilizing them to make sure that you can maximize your time effectively.
That's awesome.
Max it out.
Yeah.
What about on the personal development side of things? What is your best habit for success?
Oh gosh, my morning time is so joyful for me. I spend actually 2.5 hours by myself every morning before everybody is pretty much awake in my house. So I get up with my coffee and I have my study time and my journaling, writing out my goals pretty much every single morning. Gratitude. I have incantations that I do either when I'm sitting on my couch or out doing my workout. After my study time, I go and work out for an hour and a half every morning, usually outside to get fresh air and be rejuvenated. And between the combination of all those things, it's pretty much miracle morning. I don't do every single one of those things every day, but it's funny because I read that book like 4 years ago and I thought, no wonder I'm so happy every day. I already do all these things. So it's kind of miracle morning-ish, but Tamar Mar's own version of it.
Very cool. When you started out, was there anything that you should have, could have done differently that would have accelerated, your success? Was there something that you I wish I would have done that differently?
No.
I feel the same way.
Yeah. I think somebody asked me a question the other day. I was in a meeting and they said, if you hadn't been doing what you've been doing in the last 2 years, how would you maximize this money if we were talking about like using some money from private equity? And how would you maximize this for the most returns that you can get? And I said, I can't answer that question any other way than I am exactly at this table today because of everything in the last 20 years that has led me up to this point. And I think that it's easy to discount the things that we have done in the past, but everything that we've done really can lead us up to our present future. And we can take bits and pieces from everything we've done in a past job, a past volunteering activity. Heck, even in parenting or household management, you can take that and use it for your current business. And so I would do nothing differently than I've done. I think everything's been great and it's been a fantastic journey.
I think the key is the action. I place so much value on the action. I think for us personally, if we could have done better with systems early on and put in, better systems. I think that would have been the one thing we got there. So no regrets. But I think if we would have, started implementing, more and better systems earlier on, that would have
syndication
definitely helped.
If we had done syndication earlier, I don't mind.
Yeah. Could we have been at like 4,000 units? Yeah, very possibly. But
Yes.
I also think that we created a tremendous amount of wealth by just buying these things too. So there's no.
I agree. There's no right or wrong answer. Yes, I agree with you.
And Gino, the thing that you were forgetting before, you were talking about the reticulator, activatum, whatever. It's the flux capacitor. All right.
Flux capacitor.
All right. So let's just be clear on that.
Okay. So RA is FC. Okay.
So what about a value add that you've implemented in any of your last deals that may be a little, outside the norm that's been successful for you?
Yeah. A value add that I've done actually for my investors is that I'd say probably about 30 to 40% of the people that invest with me want to do it so that they can learn the game a little bit more. So it gives them confidence to go out and do it on their own. And I think that's true with many passive investors. And so what I started doing is holding weekly or bi-weekly conference calls during the due diligence phase of when I'm acquiring a new property. Mm-hmm. And I just barf out all this ideas of everything that I've been going through for the last week or two about financing and due diligence and the inspection results and anything that has happened. And I just talk about all of it. And then I give them all an opportunity to have a Q&A session with me. And I won't offer it to every single investor. I'll offer it to the people that I know really want to do it. Because some people are like, busy physicians and they just have a tax problem and they want to invest or whatever it is. Not all of them are wanting to be active in this. Mm-hmm. But that has been really cool. I've received great feedback on that. And I like being able to teach other people. That's a big part of doing what I do as well is adding value to them and making sure I can help them grow professionally and in their financial world as well.
I think it's offering an additional level of transparency too, which is interesting.
Yes, I will say that I've been asked some questions that I didn't know the answer to, which was totally fine with me. They might ask me something that challenged me a little bit. And I love that because it would be a question that I hadn't thought of. Because I think so many times when you're in business and you don't know always the questions to ask unless you've been in that exact situation before. And I was just talking to a friend about this yesterday. She has a first-time driver, her 16-year-old, and she's setting up insurance for him and all of these. She's like, I didn't know what questions to ask. I said, hey, listen, we all go through that whenever we get into a brand new situation in life. And so have people around you that can ask those tough questions or that you can go to them and say, what am I missing? And that's why you guys are huge proponents of having mentors. And that's exactly what that is for.
Well, I'd rather have somebody say to me, honestly, I don't know the answer to that question, but I'll go find that out. That's what I would say on a webinar or a coaching call and say, instead of having me BSing something and giving them the wrong information. So I think people respect that more because I think the average person knows that you can't know everything. Like someone can ask me about cost segregation. I can't really explain it to you. I'm not going to lie to you. But you know what? We have guys that can explain it to you and we know that it's well. So I'll find the answer for you. So I think people respect that more than just you give them some lame answer.
Yeah, totally. I agree.
Any book recommendations that you've read over the last year that you want to give a shout out or plug to?
I love books. Yes.
Just in general, like the idea of getting information from others is a good idea. Check.
Yeah. But I probably read 55 books this year, but my biggest favorite ones for entrepreneurship were Shoe Dog by the creator of Nike. And then the autobiography.
Phil Knight?
Yeah, Phil Knight.
Yeah, I have that one in the hopper. I haven't got to that one yet.
It's so good. It's on audio too if you want to put it in your disc tape. I did that one in the car.
No, I got it in the Audible. I got it on the the waiting list there or whatever.
It's so good. It's so good. I love the story. And it was like organic growth that he never really planned on. It just exploded into something. And it was so scrappy. It was such a scrappy business. And that's why you're all like rooting for his success. The biography of Elon Musk, I loved that one because it really makes you think big, or it challenges you to think bigger than what you've been thinking about before. And then just from a philosophical perspective, I read Walden last month by Henry David Thoreau. And that was great because it just touched upon simplicity in life, which I can always use a reminder of.
That's been my thing for the last few weeks. I don't know what it is. I've just been shedding stuff and like killing stuff on our websites and I've just like chunk down. It's interesting. Maybe I'll check it out. It was Walden?
Yeah, Walden. Henry David Thoreau.
Yeah.
Walden.
Fantastic. Probably my favorite book of all time as of today.
Cut out all the crap. Get down to the point,
Yeah.
Get to the point.
Yeah.
Get to the point.
Mm-hmm.
What project are you excited about right now?
Oh gosh. Well, I have a couple of scouting trips planned to different markets. I'm flying out next week to Tucson and Phoenix just to meet some people. I'm hoping to bring on a new business partner in the next couple of weeks here. We're going to have a conversation today, and that I'm super excited about because she's awesome. And I think it's really going to help me scale my business and also simplify things for me even more, which will enable me to focus on the things that I really love doing in my business. So pumped about that, and looking to have some really great acquisitions in 2019 as well.
Cool. G-Dad, what else you got?
Let me give several action steps for the listeners. Take out pen and paper right now, Mr. Stenziano.
Got it.
First step, when you're syndicating, start creating substantive relationships today. Don't wait for tomorrow or for the next week. Talk to everybody, email everybody, let them know what you're doing, offer them an opportunity. Don't ask them for money. That's the first thing. The second thing, if something is too good to be true, just send it over to me and Jake because we'll make sure it's not too good to be true. Okay? Or Tamar. But check out everything that's too good to be true because most people are jaded nowadays. And if it's too good to be true, if it is, fine. But if it's not, then you've got a home run deal. The next thing is take action. Ready, fire, aim. Let's do that in life, and let's figure. And business is all about testing. So if you make a mistake, I'd rather make a mistake and test, and then get a home run and do it that way. So that's the next one. Number 4 is momentum. We have to figure out getting our first deal because Tamar said she got her second deal 4 months after her first one, and Jake and I did the same exact thing. We got a 25 unit. 4 months later, we got a 36 unit. It wasn't dumb luck. It was just the reality of how life works. You get your first deal, your second deal is right on the toes. And if not, you have other opportunities coming up. The next one is how you show up in life is how you're going to be treated in life. If you're at a high level of energy, you're going to actually engage with people that way. You're going to get a lot more out of life. The next one is outsource everything. I think the entrepreneur should be smart enough about figuring, but this is really important, Jake, because I think most people are busy all throughout the day, sending out emails, looking at Instagram. Focus on things where you're generating revenue, not the low level $10 washing the dishes like I was at the restaurant. I should be on Facebook and engaging people and shooting videos and generating revenue. That's a really important one for entrepreneurs. Find out where you can generate revenue. If it's going out and doing meetings where you can get investors on your list, focus on that. Don't focus on
outsource/hire out.
Yeah, well, that's what I'm saying. Yeah, that's what I mean. I mean, exactly. Get somebody to help you like we're doing with Jake and Gino. We're actually hiring on more people. We have a virtual assistant helping us with social media because I can't be there 2 hours a day posting on Instagram all the time. The next one, which I think, let me just round everything off. The last one is give to get. I mean, Tamara's doing webinars. We're doing monthly webinars with our investors. You're giving a lot of information and you're going to get those investors to reinvest with you. So
you're missing one.
I'm forgetting and missing on this podcast.
I didn't hear the credit. I didn't hear the credibility book.
Oh, and the credit. Well, that's really important because what's hard about that one is I'm sure Tamar spent a couple of days doing it. Right. It takes a lot of heavy lifting. It's a lot of life coaching, right? Because it's really looking internally. It's writing down what's important to you. It's figuring out what your business plan is, how you're going to return the capital, where are you going to invest, what your strategy is, what your successes have been, and put that all together in a 15, 20-page document. You have it all ready. Then you've got to get it out and you have to get it designed. But there are a lot of work goes into it. And people are not willing to do that work because they think, hey, I'm used to making $50 an hour. I'm spending 8 hours doing this. Where's my return? But you have that book forever and you'll share that forever. And all you need to do is get one investor or get one banker or one broker to say yes on that, and bam. We'll leave on the show notes, we'll leave the link to the credibility book where you can get our credibility book.
And if I can just add to that, even if you don't put together the book itself, because I didn't put together the book itself, I went through all of the exercises, going back to what you said at the very beginning, clarity. Mm-hmm. So that gives you such clarity about who you are and what you know you're capable of. And I also think that it gives you a ton of confidence. And without confidence in this business, nobody's going to believe you.
Yep, I agree.
You have to believe yourself before other people will believe you. So even if you go through those exercises, that will enable you to streamline your message and communicate that to other people in a very successful way.
Tamar, what's the best way for folks to get a hold of you?
They can certainly go to my website at marotagroup.com, M-A-R-O-T-A group. And I also have a podcast called Investing for Life. It's about the crossroads of entrepreneurship, investing, and intentional lifestyle design. And that's at investingforlifepodcast.com.
Woo-sa. And I'm just going to give the GDAT a plug here. If you guys want to take the next step and you want to get on board with the Jake and Gino train, you can apply to work with us at jakeandgino.com/apply. Get yourself some GDAD love in there. I think I'm good. You got anything else, Mr.
That's
Papa
it.
Funk?
Nope. Just focus on clarity for 2019. Clarity, responsibility, gratitude, charity, and think about what your values are. Align your values with what your goals are. If you can align your values with your goals, you're going to hit your goals. So, Mr. Stenziano, thanks for spending an hour with me. Tamar, thank you. Everyone, thanks for listening, and have a happy new year.
See you guys.